Hi everyone, I'm Karan and welcome to Karan's Gyan. Today I'll be talking about a company that has only posted a loss in only one quarter in the past 15 years and is a market leader in the segment of dealing government securities. This company is called PNB Gilts, and as the name suggests, it is a gilt based company. So what is a gilt? Gilt is something that is gold or resembles gold, and in this case gilt is referred to as a bond issued by a country, and a country that issues a bond is least likely entity to default on that bond or not pay back money to the borrowers. This company, PNB Gilts, is actually a subsidiary of Punjab National Bank, and Punjab National Bank holds 70% stake in this company. So, what is the business of this company? As I discussed before, PNB Gilts is a primary dealer in government securities markets. What is a primary dealer? A primary dealer is a firm that buys government securities directly from the government with the intention of reselling them to the others, thus acting as a market maker of government securities. So, whatever government securities that you see on an exchange, that securities don't these are exchanged directly. There is a party involved in it, and the party is basically a primary dealer. So in this case, PNB Gilts buys securities directly from the government. It bids at those securities at an auction that is organized by the government and then sells it to investors like us, or at the open market, or to institutional investors, domestic investors, or mutual fund houses, whoever won those bonds or securities. So what are the products offered by PNB Gilts? PNB Gilts offers four main products. They offer government securities. They offer products for central government, securities of central government, state government, and treasury bills. What is the difference between these three? Well, government securities are securities that are backed by the government. Central government backed securities, state government backed securities, and treasury backed securities. And in this case, the treasury is Reserve Bank of India. So it deals in securities that are backed by Reserve Bank of India. Moreover, it deals with PSU bonds, both tax free and taxable bonds. Next, it is involved in money market instruments. You might have heard this term when you are purchasing short term debt mutual funds in the market. It deals with four main categories in money market instruments: term money, repo, reverse repo, intercorporate deposits, and commercial paper. I would explain each of these to you in the most simplest language I can. So, what is term money? Term money is generally a day to day surplus of banks or institutions or primary dealers are traded for borrowing for 1 to 15 days. So, if a bank has an excess surplus of maybe 100 crores that it feels it won't use for the next 15 to 20 days, it can lend it to the market as term money. What is repo or reverse repo? So this is a form of secured borrowing in which, for example, company A decides to sell an asset, for example its loan book or a part of its loan book, to company B, and this company B would buy this loan book for suppose 100 crores. Now when this company A sells the loan book to company B, it says, well, you can buy this loan book from me for 100 crores, but after 90 days I would pay you 110 crores for this loan book that is sold to you. So it is basically the sell and repurchase of the same security, which in this case is a loan book, and the price and duration is determined by both the parties, by both company A and B. Just so that you know, this is a technique that is used by RBI for injecting liquidity into the system. Next is intercorporate deposits. Intercorporate deposits are basically deposits that a company puts up for another company for it to be lent. So if a company has 250 crores that it doesn't want to use for maybe 1 year, it can put it as a term deposit or an intercorporate deposit, whatever it wants according to its requirement, and basically lend it out to some other corporate entity that wants that money. Next is commercial paper. Commercial paper is basically a short term unsecured debt instrument. Lastly, the product that PNB Gilts deals with is Gilt Account. Gilt Account is basically a very similar to a bank account. It is used for credit or debit of government securities. Instead of money being credited or debited, government securities are credited or debited. It's just like a demat account for government securities. Now, talking about its fabulous quarter one results, and I'm really impressed by these results. And like I told you before, this company has only posted loss in one quarter in the past 15 years. So it has an excellent business strategy, and it is in an excellent field, and it is a market leader in that field. So let us have a look at its quarter on quarter basis results. We see revenue from operations in this quarter is about 491 crores compared to the previous quarter, where revenue from operations was 276 crores, and 80% increase. Finance costs have decreased. Well, they would be finance. They would have some form of financing in order to buy the government securities and then sell them, because in order to buy government securities, you being a primary dealer, you would have to buy thousands of crores worth of securities at once, and that much cash being available is really hard to encounter. Next is net expenses. The net expenses have dropped, and if I look at the net profit on quarter basis, the increase in net profit is about 190% from 99 crores to 284 crores. Now, let us look at year on year basis. Even year on year results are, in fact, better than quarter on quarter results. Last year, in this quarter, the revenue from operations were 193 crores, and compared to this quarter, there's an increase of 153% revenue. If I look at finance costs have again decreased by about 13%, and net profit has jumped by about 530% from a profit of 45 crores in the corresponding quarter last year to about 284 crores in this quarter. Now, let us have a look at segment wise revenue. It basically has three segments of revenue. One is interest income, fees and commission, and net gain on securities. So you would ask me, if it is a primary dealer and its motive to buy securities, government securities, is with the intention of selling them to others, how is it earning interest income? So the interest income is basically, if I put it for you in layman language, when this company buys government securities, it is not entirely possible for it to sell the securities overnight. It would have to store the securities in its books, and it would be able to sell the securities over the period of maybe 2 to 3 months for them to find a suitable buyer at a suitable price. And thus, when they have the security on their book, they would be earning an interest from the securities. And if I look at the interest income, we see the interest income has been increasing over the quarters. 161 crores for June 2019 to 210 crores in this quarter. It means that their book is expanding and they have more government securities on their book. And the plus side of having government securities is that they are like gold, they are least likely to fail, and that's why these government securities are called gilt. Next, fee and commission. So obviously they are a primary dealer and they would be selling the securities they bought to other people or to a secondary market, and they would be earning fees and commission correspondingly. And if I look at fees and commission, I see the fees and commission have been increasing drastically over the quarters. Over 1 year, the fees have gone from 67 lakh to 1 crore 67 lakh, almost increasing by 1.5 fold. And this means that their more securities are being sold, and this is a really good sign that their business is picking up from what it was. Next is net gain on securities. Like I told you about when I talked about interest income, that they would be storing government securities on their books while they are finding a suitable buyer. If there is a change in the price of the government security, that gain or loss would that would they'll correspondingly have a gain or a loss. So if they are holding a security for 100 crores, and tomorrow if the security appreciates to 120 crores, the 20 crore would be a gain for them. Moreover, since they are primary dealers, they would be adding some surplus price to the bond that they are selling. For example, if they are buying a bond for maybe 1 lakh rupees, they would be selling it for 1 lakh 10,000 rupees. So even that's a net gain for them for dealing the securities apart from fees and commission. Now, let us have a look at the market capitalization. Market capitalization is 840 crores. Book value is 57 rupees. Price to book value is 0.81. Dividend yield is really good. It's 6.43%. Just like it's in fact better than a savings account. Face value is 10. Let us have a look at the share price. The share price as of now is going at 46 rupees 65 paisa today. Because of the results, it has a increase of about 3.78%. And if I look at 1 month basis, I see the share has been increasing drastically, increasing from 35 rupees to about 46 rupees. If I look at a 1 year period, the share has been doing good. 2 year period, it has been doing good. 5 year period, if I look at a 5 year period, I see in 2017 it made a high of 61 rupees, which is higher than its book value. Just so that you know, the book value, like I said, is about 57 rupees and 92 paisa, and you are getting it at a discount compared to the book value it has. And book would basically be the government securities that it is holding. And since government securities are known as gilt or gold, obviously this book value won't decrease at a rapid pace compared to a company that deals with corporate securities or private companies. So, guys, this is my take on PNB Gilts, and looking at its price and looking at the micro cap capitalization, this can be a good addition to your portfolio. However, like I always give you a disclaimer, do your due diligence in this company, and do not invest a lot of money in this company because it's a micro cap company. Invest in large cap and mid cap a lot more than what you're investing in small cap or micro cap. So guys, this is pretty much it, and I hope you like my video. Thank you very much and have a nice day.